Well, the Federal Reserve will decide this afternoon if it will raise interest rates yet again. If the Fed does, it will be the 10th consecutive hike since March of 2022. So for more on the potential hike, I want to bring in CBS News reporter Sarah Ewall-Wice. Hey, Sarah. So the expectation is there will be a hike?
Yes. Right now we are expecting a 0.25 percentage point hike at this meeting. That's what the markets expect. But the real interest here is what the Federal Reserve Chairman Jerome Powell says about hikes moving forward. As you mentioned, this will be the 10th consecutive hike if they do announce it at this upcoming meeting, after this upcoming meeting. But we don't know if they're going to then signal that they're going to pause hikes moving forward. Even if they do, we expect the federal funds rate to remain high for the rest of the year, and they won't actually start decreasing it anytime soon. With that said, there are questions about whether they will actually raise the rate at this meeting, and there are some factors going into that 0.25 percentage point logic. Right now, we know that the labor market does remain strong. There has been cooling there, but they still added 236,000 jobs, and we'll get another jobs report for April on Friday. So that remains strong. That was a good sign for the Fed while they do this. And also another thing is they're doing this to help ease inflation. We saw record inflation in the past couple of years. With that said, the idea here would be to continue cooling with this hike today. We have seen easing in inflation. If you think about it, the inflation prices are up 5% year over year, which is down from the peak we saw last year. But there's still 5% is still more than the Federal Reserve wants to see. Their target, of course, 2%. And they actually look at a slightly different measure. I'm getting a little wonky here. But even the measurement they look at is that inflation is up 4.2% year over year. So that's still more than double their target 2%. So there's a lot of things at play here, but we do expect that 0.25 percentage point hike at this announcement today.
All right. So Elizabeth Warren is among a group of lawmakers sent a letter to the Federal Reserve, basically asking, I guess, not to raise interest rates.
Yes, you know what? I will say Senator Elizabeth Warren is not Federal Reserve Chairman Jerome Powell's biggest fan. In fact, she's really one of his harshest critics, if not his harshest critic in the Senate. And of course, she sent this letter, but this is not the first time she has gone after Powell and the Federal Reserve as they've worked to combat inflation. She's previously called him a dangerous man. But in this letter specifically, she and a couple other lawmakers, largely progressive lawmakers, have urged the Federal Reserve to pause interest rate hikes, not implement one today. And they're really urging, and they said it's to avoid engineering a recession that destroys jobs and crushes small businesses. So they're concerned about that balancing act. The Federal Reserve is working to combat inflation, but at the same time, if they take too many measures, they could push the U.S. into a recession. So they're focused more on that side of things. Something in their letter they did reference as well is that the banking system has gone through some serious struggles in recent months. We saw Silicon Valley Bank fail. We saw Signature Bank fail. And just this Monday, we saw another bank, First Republic, that was purchased by J.P. Morgan Chase. So they're talking about that and noting that the turmoil in the banking system is serving as its own tightening in the lending system. So they think that'll serve as the same way as the interest rate hikes. But I don't expect that to have an impact on today's meeting.
So let me ask you something else. Treasury Secretary Janet Yellen issued a warning to Congress that the U.S. could default on its debt as early as June 1st. Now, she's already taken what she calls, extraordinary measures. We talked about that when it happened. And the idea was, they had until June, but not June 1st. That's just a few weeks away. Can the Federal Reserve play a role should we find ourselves, at the 11th hour and still, the two sides haven't figured out a way to come together?
Federal Reserve Chairman Jerome Powell has been asked this multiple times in recent months, ever since Secretary Yellen started sending letters to congressional leaders warning them they needed to act. And he has really said that this is something that Congress needs to act on. They need to raise the debt limit. And he's talked about the consequences of them not doing so. He's talked about the markets going into turmoil, how this would undermine the U.S. standing, the dollar as the reserve currency. So this really has broad consequences that would rock the entire financial system, not just in the United States, but globally. And he's saying that Congress needs to act. There has been talk of this idea that there could be the minting of $1 trillion coin. He's dismissed that. That is not something that they're signaling they can do. And so we have a very tight window where Congress needs to take action. They need to come to an agreement with the Biden administration to raise or suspend the debt limit. And as you mentioned, June 1st is sooner than many had anticipated. We had been looking at how the tax receipts have been coming in, and that timeline has really moved up on us. But, you know, Secretary Yellen has been saying since January that, of course, June is the earliest. And so they have had time, but the Federal Reserve right now is not saying they will be able to take action on this with the catastrophic consequences that could come with a default. It'll be interesting to see what he says at this meeting after he has been asked about this at other meetings in the past couple months.
Sarah, thank you very much.